Ladies and gentlemen.
Welcome to the BlockCrunch podcast, the go-to podcast for investors and builders in crypto. This episode is also brought to you by Paraswap. Stick around to learn more. Hey everybody, welcome back to another episode of the BlockCrunch podcast. Now this is a highly requested episode with Kyle Samani, who previously came on the show about 3 years ago. So Kyle, I'm super excited to have you back again. Welcome to the show.
Hey Jason, great to be back on the show.
Now, since we chatted 3 years ago, you've made a series of highly public and at times contrarian, but generally extremely successful investments, the likes of Solana, Thorchain, Helium, Graph, and others. And naturally, a lot of our listeners want to know how you were able to identify those investments and more importantly, stick with those investments during kind of volatile market times. So a lot of this interview, I expect, will be focusing a lot on your process and a lot on your principles. So kind of just to start us out here, because in our last interview 3 years ago, you mentioned you had a very thesis-driven approach where you formulated your kind of three-pronged mega thesis and then found projects that fulfilled different parts of that thesis to invest in. So looking back at these years, has your approach changed at all and how have your thesis evolved?
Yeah, so our approach has changed some as a function of learning what we've done well and what we've made mistakes in, as well as our AUM has grown. And so we have to think differently about how we spend our time and what kind of bets we can and can't make. So things have evolved. I'd say the thing that has not evolved really at all is our theses. Our three core theses that we wrote about 2-3 years ago are intact, and we continue to invest along them. And those are open finance, which is really a superset of DeFi, Web3, and the opportunity for non-sovereign money. So those certainly guide our theses. I would say, if anything, we're looking to maybe add one more to there, probably something around creator monetization and or the metaverse. I think those are two pretty distinct concepts, but those are two things that I spend a fair bit of my time on today. But those three I just identified are theses that I believe will continue to compound for the next decade, and so we're very happy to continue being long those theses.
Got it. And do you kind of go about finding projects that fit these different theses, or is it more of a bottoms-up approach where you see founders that are really good teams and you just decide to invest in them?
It's both. We have historically not done much pre-seed investing where you say, here, smart team, interesting market, let them go. We have done that at times. For example, Project Galaxy, I would say, kind of fits that bucket that we invested in a few months ago. There have been some others. But for the most part, we have been more focused on theses. We are very analytical. And if you were to listen into our investment committee discussions, we spend probably 80 to 90% of our time discussing market structure and really understanding, okay, how is whatever problem that's in the world today currently being solved? What are the weaknesses in the current model? And then can this new approach being proposed by this team, is there really a wedge there, right? And then, conversely, are there network effects and those kinds of things? So we spend almost all of our time focused on markets, and comparatively little, I would say, actually focused on products or team. Not that those things aren't important, but if you're aiming for, I think 1,000x outcomes, I think that's where you have to spend most of your time and energy.
That makes sense. And speaking of newer solutions, one of the most successful investments to date is clearly Solana, which at the time of your investment was actually a really contrarian bet. And you've been public about why you invested in the beginning with your blog posts. But I'm curious, what along the way made you realize that you were right and gave you the conviction to double down?
Yeah, I mean, weirdly, the thing that gave us the conviction to double down was seeing the lack of progress in Ethereum. Ethereum is launched in July of 2015, so it's 6 years old, and the tangible progress that you can see in 6 years on scaling is pretty poor. I understand there's a lot of smart people working on stuff. There are pockets of interesting innovation. I'm particularly interested in Starkware and what they're doing with DYDX and some other teams. And that stuff is cool, but generalized scaling, I can pretty confidently today say there is still no credible path for Ethereum to get to a generalized scaling strategy. There's lots of interesting theories of how we can get there. And some of those theories may turn out to be correct, but you really can't definitively say with 100% confidence how this thing is going to scale. And it's been 6 years. Um, and I kind of really started to realize that even probably 2 years ago, that everything that was being discussed was just not enough. And that's what gave me the conviction, really gave us the conviction to lean more heavily into Solana. I mean, although there's a lot of technical risk in Solana, like they try to tackle a lot of difficult problems, and they seems like they basically tackled all of them. They weren't trying to solve unsolved computer science problems. And the Ethereum scaling bet today is really a bet on solving a series of unsolved computer science problems. And sometimes those bets pay off. Like sometimes it does happen, but when you're at the limits of physics and the limits of logic and math, like it's extremely difficult. And so, yeah, that's what really gave us a conviction to double down on Solana.
That's really interesting because it ties back to how some of your investment decisions you said also relate to the market structure. So it's not just about the team or the product, but also about what's happening around the product and the ecosystem. And on that point, when you make a new investment, right, what is your process like? What are the main things that has to check off on your checklist before you invest?
Yeah, I mean, I don't think we're that different than most other VCs on this front. I mean, but by again, the thing I think we spend an inordinate amount of time on is market structure and understanding how does the market really work today, and then what is the wedge this team can leverage to get going. And for example, with Solana, I remember having strategy meetings with Anatoly and Raj and others in late 19, early 20, and we said the thing we should try and do is figure out how to build a central limit order book. Because that's what Solana can do. Obviously, we got very lucky that kind of Sam showed up and he got very excited about doing that. And we could not have forecasted that at the time. But like, we were like, this is the unlock, and that's going to be the wedge that gets this thing moving. And that turns out to have been correct. When we look at other opportunities, we look at kind of similar things. So let's look at Thorchain, for example. Thorchain, actually, the wedge is pretty obvious, which is there's hundreds of wallets out there, right? Exodus and Jax and Trust Wallet. I mean, there's 100 of these things, and they're basically all multi-chain now. And like, if you want to trade from Bitcoin to ETH, there's just not a great way to do it in a trust minimized way through all these wallets. And so our theory there was, hey, if you can solve this problem credibly, then it's actually pretty easy to get people to use the system because all you have to do is call those wallets. And those wallet teams like pretty obviously want to integrate this. They're incentivized to integrate the system. And so, that to us is like a great wedge, where you really only need to make 10 or 20 or 30 phone calls and you can get distribution for something like Thorchain to millions of people. So those are the kinds of wedges that, we spend our time thinking about is, okay, the idea is big, the market's there. How do you really make this thing work?
And have you made any exceptions to finding a wedge? Have you invested in things that there was no clear wedge at the time that you invested, but you still ended up making the investment?
Um, I'm not sure off the top of my head. Nothing comes to mind off the top of my head.
And I guess on that vein as well, are there certain types of products or projects that you will just categorically not invest in because of maybe it contradicts with your thesis or?
I think there's sectors that I'm quite skeptical of value capture. So, for example, yield aggregators, I'm pretty skeptical, as well as liquidity aggregators. So things like 0x Protocol. I love the 0x team, love what they do, great product. I'm very skeptical about value capture. So there are certain segments that we continue to receive pitches on, but generally we just haven't invested in. But those are sectors that we've seen multiple teams in them and kind of developed a view of that sector. There's a real delicate balance between being exclusively thesis oriented and then also being opportunistic and open minded. I'd say the best example of that is something like helium. We could have never forecasted helium when we started, and Amir showed up and described what he was doing, and we were like, look, we don't know anything about hardware, we don't know anything about telecom, but we spent a lot of time reading and thinking and looking at the existing market structure, looking at Verizon and AT&T's offerings. There's some interesting things that look like helium in Europe called the Things Network, but there's no economics in it. It's like a charity thing. We looked at the history of people have been trying similar ideas with Wi-Fi networks over the last 20 years. So we kind of looked at the history of all of these types of wireless networks, and we through that historical analysis developed higher conviction that putting economics into the system is the unlock to make it happen. And it's been 2 years now, and it looks like that thesis was correct. But like we could have never forecasted that when we started. And so you have to be delicate between staying exclusively on thesis versus realizing, hey, there's an entirely new set of things here that can be done. I'd say building on that, in the last, I don't know, 60 days, we've led 2 investments that we haven't announced yet in things that look like helium, in the sense that like they're about convincing real people in the real world to go do stuff. And again, have an economic motive kind of built into the system. And obviously everything we've learned from helium has given us the courage to like really double and triple down on that. And so we're quite excited about that. And again, like it doesn't really fit into our existing 3 theses, but we're developing conviction around this idea of using permissionless economics to incentivize people to do things in the real world.
It's really interesting to hear you say that your forecasting for Solana and Helium were initially conservative compared to what actually played out. So, how important is being able to forecast outcomes actually to investing in crypto?
Yeah, I mean, I've believed for quite some time that Solana was going to be a top 5 coin. I've been saying that privately for several years, and I think it's number 6 right now, so pretty close. In the case of Helium, harder to forecast because of they have different networks they're working on, the IoT networks, 5G networks, and other ones. And those networks will not all have uniform degrees of success. They will vary based on all kinds of interesting kind of real world dynamics. Um, One thing I've realized is it's very hard to forecast at the time of entry the difference between 100x and 1000x. Like you can't really credibly sit there and be like, no, it's only 100x and not 1000x, or vice versa. Say no, it's 1000x and not 100x. It's very difficult to do that, and so you just need to believe that you're above some minimum threshold, or I'd say 30x or something. And if you really think that if you are right, you can get above that threshold, then you go along for the ride, and you're always going to learn stuff along the way that you could never have forecasted at the time of entry.
Absolutely. And speaking of these kind of 30x to 1000x, I think one thing that really stood out to me about crypto is how narrative driven it is sometimes, and price can peel away from fundamentals. And I remember I was really surprised that Ethereum Classic was rallying after a 51% attack. And I was also surprised at how projects like Thor were trading in the billions before the product was launched. So, how do you bake into your process the sometimes confusing relationship between price and fundamentals?
Yeah, I'd say we mostly ignore price. I go out of my way to not look at the prices of things. I mean, like I generally know Bitcoin is, call it 40K plus or minus, because like it's in my Twitter feed and I can't not see that. But like I don't go to CoinMarketCap or CoinGecko and check prices, and I find it screws with my head to do so. And so for the most part, I ignore prices and really just focus on thesis formation. And then once we've formed a thesis and invested in it, then I turn my brain and do the exact opposite, which is say, what are all the reasons that the thesis is failing or not playing out? And I spend basically all of my time kind of thinking about that. Should Thorchain be worth $2 billion before it launches? Like, obviously not. But like, it could go to 10 billion, and or it could go down to half a billion. Like in the short term, you never know how these things are going to move, and so we just don't spend our time thinking about that stuff and really just focus on the core theses. One thing that's quite unintuitive to most people is things can compound indefinitely. So like the good example of this is like Amazon. You could have bought Amazon in 1997 and just been like, I'm long online shopping,
Mhm.
right? And like 24 years later, you can still be long online shopping.
Yeah.
Right now, obviously you couldn't have forecasted AWS and some of the other things they
Mhm.
were doing, but like the core thesis of it's a bookstore where you have great shelf space, you have economies of scale from the warehousing model, like it's a better search model for most products. Like you could have forecasted the delivery times being shortened over time. Like the whole kind of core business of Amazon, you could have forecasted that in 1997, and it didn't require like great insights about the future of the world. You just had to belong the thesis. And so when I look at something like Thorchain, for example, it's like, okay, do you believe there will be many chains in the world? And like, I'm at this point, that's like pretty obvious that the answer is yes. And so like, okay, like people are going to move value between those chains. And so like the thesis for Thorchain is pretty intact. Um, and like just let things compound. I'm a big fan of just letting things compound.
Yeah, makes sense. And I remember Chamath once said that slow compounding is kind of his key to success, rather than just trading in and out and trying to capture every single move, just allowing positions to play out. And I guess on that note, how do how much time do you give an investment before you say that, hey, maybe this is not working out? And what are the things that you look to check off before you invalidate your thesis?
Yeah, it's hard to generalize this because it's so case by case. Like some teams, for example, like Starkware is solving math, like they're at the limits of math, right? And so like you just got to be patient because like they're just solving extremely difficult technical and mathematical problems. Or like Solana, the same thing. We invested in 18, they didn't launch until 20. So you got to be patient. Other times, if like, hey, you're building a smart contract to be like a yield aggregator, if you can't ship this thing in 60 days, like there's a problem. And so you got to judge against kind of this degree of scope of difficulty of what's being accomplished. I don't mean anything against yield aggregators. I just picked a simple idea. So it's hard to generalize. The other thing I would say I really look for, again, especially for things that are pre-product, is the kind of the fire in the team. And you can tell when entrepreneurs are kind of like getting bored or their minds are wandering. It's usually not very hard to tell. And as long as they're still focused and committed, that's kind of the most important thing, especially when you're pre-product.
Yeah, and on that point about invalidation, one thing that I really, really respect about you is how public you are with your calls and even with the mistakes that you've made in the past. And one investment that I think we discussed back in 18 was EOS, and you publicly admitted that you were wrong on the thesis about EOS. But I'm more curious about, what made you realize you were wrong, and at what point did you realize, okay, this thesis is not correct. We're going to move on to something else.
Um, so there's a few things. So one, kind of probably this is August or September of 2018, a few months after the mainnet launch, and there started to be like spam attacks on the resource model. One of the things we had liked about EOS going into it was it had kind of an inverted resource model where you had to stake EOS to get access to the network resources. It turns out our assessment of that model was just outright incorrect, and it was like made it very prone to being spammed and made the network unusable. And like that started happening, and we were just like, okay, like this thing is not going anywhere. And like that was a real big eye opener for us. The other thing that really kind of caused us to invalidate our thesis was we actually spun out a block producer. So one of our analysts on our team at the time was a guy named Miles, and he was pretty into EOS. He was kind of our lead person internally on EOS. And Miles, said, hey, I want to really go build a block producer. And we said, okay, we were very supportive of him and try to help him. And he kind of spun out as a separate entity. And what we realized very quickly was the cartel, like the dynamics of getting votes and I think we got to like number 80 or something on the list, but like never even got to being like in the top 50 or the top 40. And, we were big public EOS bulls. And as we kind of went through that process, it made us realize just how cartelized it really was. And so we kind of, that also made us quite bearish. Again, to the credit of the Ethereum community, both of those criticisms were levied against EOS before it launched. We thought they were wrong. Obviously, we were wrong. And by the end of 2018, we got out of our position. And so it was a painful lesson. I think actually the more important thing is to say, look, we had a bet on a different way to scale a blockchain. And neither the resource model in EOS nor the cartelization of the DPoS consensus was in any way related to the invalidation of the thesis of you need to scale a blockchain. And I think, if you look at the comments I've received on Twitter over the last 18, 24 months around Solana, like just overwhelming consensus from the Ethereum community is you already tried this with EOS. You're an idiot. Why didn't you learn your lesson? And I think they're like not being nuanced enough in their assessment of what went right and what went wrong. And so, in the case of failure, you need to be very careful in your analysis of, well, why did it fail? And did it actually invalidate the thesis, or were there just mechanical problems in that particular instantiation?
Now, before I continue, I'd love to share one of my favorite products in crypto with you. Now, whenever I want to trade a token, instead of going to Uniswap, SushiSwap, Bancor one by one to see where I can find the best quote, I just go to Paraswap to scan for the best price anywhere. Because Paraswap aggregates all the popular Ethereum dexes and saves me a ton of time and headache in finding where I can trade something for the best price, and lets me trade in one place. Now, the cool thing is they've also integrated with Ledger Live as well, meaning I can now swap at the best prices directly from my Ledger wallet. So seriously, if you're a DeFi trader and you're worried about the security risks of centralized exchanges, but you also don't want to scour dozens of dexes just to find the best price, you have to check out Paraswap. So head on over to paraswap.io/blockcrunch. I love how specific you are with what went wrong with the specific thesis. And I guess bringing that to Solana, what would have to happen for you to kind of maybe invalidate the thesis on Solana? What are some specific events that might have to happen?
Yeah, I think the most important thing to me, I mean, if I could find a relatively impartial, like a person who's not like full time crypto, who says I need to support 100 million users a day, and I'm going to do it on Ethereum, and here's how I'm going to do it, and if I can find that person who can describe that, that would meaningfully reduce my conviction. I don't think it would reduce it to zero, but it would meaningfully reduce my conviction in Solana. Because Ethereum does have a brand lead, it does have liquidity, like it has real structural moats, like those are real. But my whole core thesis of Solana is that the Ethereum approach is just not going to get you to the degree of scale you want to get to, or at least not on a forecastable timeline, where CTOs who are responsible for billions of dollars of revenue and hundreds of millions of users can credibly underwrite that technology stack and say, this is how we're going to do it. And I look forward to the day where I can talk to a CTO and he can say, this is how I'm going to do it. I have attempted to talk to many CTOs over the last 3 years and have them tell me how they're going to do it on Ethereum. And 100% of them have said, I can't make this. I don't know what to do. And so, that's really the key thing is, and it's not just that like you can prove some theoretical thing. Like Starkware is a great example of this. Again, I love Starkware, but like the world doesn't know how zero knowledge stuff works. Like it's literally at the limits of mathematics. It's like kind of sort of composable, but like I don't know, maybe it is, maybe it isn't. It's weird programming languages that like no one knows how to understand. It all compiles into these weird circuits. No one knows how to debug this stuff. It's not taught in any schools, right? So it's just like even if you assume kind of the most optimistic interpretation of all of the theoretical claims the Starkware team makes, like, okay, well then just go call 10 CTOs or 50 CTOs and be like, hey, can you like, do you know how to make this thing work? And are you willing to commit the future of your business to this tech? And like immediately, just like they all hit walls. And again, I don't mean there's anything against Starkware. We're long Starkware. We have been for a long time. I love what they're doing, and I think it's incredibly important what they're building. But you just have to recognize how early that stuff is, and how difficult it is. And when I look at Solana, it's like, okay, it's a database. Okay, they're using what's it called, data propagation tools that are modeled after BitTorrent, and they're using Rust as a primary programming language. Rust is taught in every single computer science school on the planet. It's the fastest growing language in the world, and is the most loved programming language in the world. It's just like, okay, CTOs can get behind that and underwrite that. But they just can't, unfortunately, for the other approaches. Again, that will change at some point, but it's not clear when or how exactly that will happen.
And I don't know if you remember this, but 3 years ago during our interview, you mentioned that you thought the odds of success for Ethereum, you placed that at about 20%. Is that still true today? Have you kind of changed your view on that?
I mean, so it depends on the time horizon on which you're asking the question, and then also it depends on how you define success. I think there's a pretty good chance Ethereum, it doesn't go to zero, but I think it becomes meaningfully less relevant over the next 3 years. I'd say my probability that is true right now is 50%.
Wow, I see. That's definitely a contrarian view if you kind of hang about Twitter. So I think off the back of that, how do you differentiate between having enough conviction to hold on to contrarian bets that may take some time to play out, like Solana did, and being flexible enough to know when you're wrong and kind of cut your losses? Are there specific things that you look for to confirm that you're wrong, or do you restrict your thesis to maybe a specific deadline? Because it sounds like a lot of your comments revolve around 3, 5, 10-year horizon. So it sounds like mentally you kind of make those deadlines.
Yeah, you can't be. I think having specific times involved based on the time of entry is pretty difficult, because like, look, software is delayed, and like some things go way slower than you expect, some things go faster, and it's you can't be too precise. The thing you have to ask yourself is the core thesis invalidated or not? So if you look at, like, for example, Solana, the nadir of Solana in terms of just like overall ecosystem bearishness, everyone's like, this thing is done, was like exactly when they launched mainnet, which was like late March, early April. Black Thursday just happened. The world was on fire. Ethereum's DeFi was starting to work, like really work. And like no one cared about a new blockchain. And like the team was running out, like they were almost out of money. Um, and and so at that time, I mean, we had discussions internally about like how do we sell this thing and get out of this thing. We didn't, but at the time I said, look, guys, like, okay, this DeFi thing is working, gas consumption is growing, but like, how are you going to get more people to use this thing? And no one internally could answer that question. I couldn't answer it, and no one else could either. And so we said, okay, well, like then the thesis is valid. Like we need a way to get a lot of people to use these systems.
So it always goes back to the core thesis, and if it changes, then it affects your outlook.
Yeah.
And I think on that relevant note, one thing that is really not discussed as much is kind of how do you size bets, right? Because there's really no fixed rule. I know some investors like Soros, they put 3x their whole fund into one idea, where some investors may cringe at a 10% idea. So what in your mind is the right framework to think about, hey, I'm really confident about this thesis. How should I size this thing?
Yeah, it's very difficult. Probably the most scientific way to do it is to try and enumerate the major kinds of risks you are taking. So, for example, there is technical risk. Like, well, sometimes there's not. Like, if you're deploying a smart contract for like a yield aggregator, like I assign technical risk of that as 0. Like, there's all the problems are known to be solved. Now, if the founders get in a fight and they hire a bunch of dumb engineers, like that's execution risk. But like literally every investment ever, by definition, has some basic execution risk. So you have to kind of break out like the really fundamental risks you're taking. So like one major source of risk is technical risk. Like, are they solving a set of problems that are either unsolved or like borderline unsolved? And like certainly Solana fits in that category. Helium fit in that category. Starkware fits in that category. We made a number of other bets as well. Audius fit in that category. So that's kind of one major source of risk. I'd say the next major source of risk is like market risk. Is like sometimes what the market is, but sometimes you don't know what the market is. And you, like, for example, Project Galaxy is a good example. We really don't know what the market is. We think it's a very interesting design space, but we don't really know what it looks like in 2 years. So that's a major source of risk, is just even knowing what is the market versus what is not the market. Ethereum in 2015 or in the ICO, right? Like Vitalik was like smart contracts, and everyone was like, what are these useful for? And just like no one knew what what smart contracts were useful for back then. So being very clear about how defined is the market of what it is you're trying to build. And then I think the third is this team, certainly. And if you have conviction a team can execute, that can give you conviction to size up because it reduces just general overall execution risk. And then probably the last major is just like, again, thinking about the wedge, right? Of like, how do you get this thing off the ground? And sometimes that's a lot easier than others. For example, in Helium, actually, the wedge is extremely difficult because companies that want to leverage this IoT network, whether it's bikes or scooters or mouse sensors or farming equipment or whatever it is, those people for the most part won't take it seriously until it covers, I don't know, 150, 250 million people. So even if you get to 50 million people of coverage, like customers won't sign up for the network, and so like that's like very, very, very difficult. In others, it's much more obvious. It's like, okay, if you solve this problem, like customers are going to show up. And so you're kind of counterbalancing all of those things. And then, as you start to make investments over time, you start to kind of rate different investments you have made across those metrics at the time you made those investments. You can kind of start to see, okay, what should I size larger versus smaller?
Yeah, and then on that point about opportunity cost, there's this GP that I invested in, not in crypto, in the traditional world, and he talked about how he'd always stack rank his investments and kind of see every month or every quarter, he'd see kind of which investments he likes more than the others and kind of resize his positions based on that. Do you guys do a similar process, and how do you in general think about opportunity cost?
We do not do something comparable to that. Something I generally believe is that 90% of all decisions that all people make are value destructive, and I include myself in that as well. I think people are generally not patient enough with letting theses play out. And so I don't, we generally do not try and reforecast on a quarterly basis our entire portfolio. Do we like it more or less than we did 90 days ago? My general rule of thumb is, hey, if I was willing to invest, put my name on it, and be there to support the entrepreneur, that I'm going to let the thing play out until I'm convicted that I'm wrong, and not trying to re-question it otherwise. 5% adjustments here and there or whatever. Like I don't. It's not worth thinking about. The exercise we do that's in a similar vein is what's it called? Once a quarter, we do a quarterly decision review, and we look at all of the decisions we made over the prior 2 quarters, and ask the question: did we make a good decision or a bad decision? And so, obviously, after 3 to 6 months, having made a decision, you have some new information about how things are going. And in the cases where our goal is to separate luck from skill in that assessment, because sometimes you get lucky, you make a good decision, but you get unlucky. Sometimes you make a bad decision and you get lucky, and so you need to be able to try and parse those things, apart. And so through that exercise, we look at everything and we say, obviously, we do compare the current price versus the price at the time we did it, and that obviously tells you either yes or no, was the outcome good or bad, but also you get new information along the way. And so, the thing we generally look for is, hey, did something bad happen to that investment after we made it? And if so, could we have forecasted that bad thing was going to happen at the time we made the investment? And sometimes you realize after the fact, I could have identified that source of risk. I could have said, this is a problem. Sometimes just bad luck happens in the world, and like whatever, you couldn't possibly have forecasted bad things. So we try and be really honest with ourselves of, are we being diligent enough? Are we being thoughtful enough in our assessments? And then obviously learning from those mistakes. And those meetings, it takes usually 3 or 4 hours to kind of go through it. It's a pretty mentally exhausting kind of meeting, but it's really fun and enlightening to figure out what was I really right about versus wrong about.
Yeah, and when you attribute those mistakes, when you do identify them, one thing that we did when I was interning in Bridgewater as a college student was we would personalize the mistakes a lot. We would say, hey, you were the one who kind of did this, and in turn, it kind of helps you fix that. But at the same time, obviously, that might also hurt morale. So how do you balance it? How do you kind of personalize mistakes enough to learn from them and action on them versus making sure that everyone's still kind of collaborative?
This is kind of a fundamental management question. Different people respond to criticism and to praise in different ways. For example, I actually generally dislike praise, and I actually like criticism, and like people criticizing me kind of gets me riled up and pushes me to work harder. And like you can see this very obviously in like Twitter and all the stupid Twitter fights I get in kind of all the time, right? Like it gives me that energy. And when people tell me I'm the greatest person in the world, I'm just like, shut up and go away. Like I don't want to deal with you right now. And so I am in the pretty small minority of humans that process those things in that way. I suspect kind of I'm like sub 5% in that kind of emotional processing framework, and maybe sub 1%. I don't even know. And so coming back to your question of like, how do we you do this as a team? Well, like Tushar and I are the final decision makers on all investments, and so to some degree, it's us talking to ourselves either directly or in our own heads. And Tushar and I were fortunate; we've known each other for 12 or 13 years now, and are very good friends, and you just know each other very well, and have developed the emotional and intellectual capacity to be honest with each other on what is or isn't working, and why it isn't or isn't, and then not letting that become emotional and such. As it pertains to the rest of the team, it's I generally try and frame it as okay, it's never personal. But okay, well, look, like let's try and make sure we understood how we made this mistake, and then let's do better next time, and be supportive and encouraging. Applying how I process feedback to most people is generally backwards.
That makes sense. That makes sense. And Kyle, in the last 10 minutes of our discussion, I'd love to kind of focus on tactics a little bit as well. One thing I did notice in crypto is this tendency to kind of spread your bets across many, many, many investments because the upside is so asymmetric. But then you guys are known for kind of concentrating your bets and being very thesis driven. So I'm curious about how you do this. Do you kind of limit your portfolio to a certain number of positions or a certain number of investments you can make at any time? Or how do you make sure that you're concentrating enough in your highest conviction thesis versus spreading through everything?
Yeah, I mean, again, it's difficult. You got to ask yourself the question of how concentrated do you want to be, um, and go from there. We've preferred concentration to diversification. Um, Unfortunately, there's no good science to it. It's a function of risk and preference for risk tolerance. Um, I have learned that I have higher risk tolerance than almost everyone else that I know, and like 50% drawdowns, like I literally don't even blink. I don't even observe that they happened. Um, and I've realized that 99% of people are unwilling or unable to do that. Um, and so I kind of lean into that strength, right? Like that's now an opportunity for me to make types of decisions that other people are unwilling to make. Um, if you're unwilling, if that's not you, like that's fine. I'm not saying I'm right versus you're wrong. You just be cognizant of that, and then you probably want to diversify more. If that's the case.
Absolutely. And this is a very, very specific question that someone in our listener community asked. Do you use starter positions? And I think what he meant by this is some people, when they see a project that they think is interesting, they maybe put like 0.5% or 1% of the portfolio as incentive to learn. I think Soros kind of discussed something like this before. Is this something that you do? And if not, how do you know when you have enough information to kind of pull the trigger on an investment?
Yeah, I mean, again, it's tough. We try and kind of assess the combination of market size and wedge and market structure and all those things. And if the more of those check the box, the higher the conviction we get. Um, Unfortunately, it's like harder to reason about more than that. It's one of those things that over time, as you make mistakes and have successes, and then you look back and say, what mistakes did I make and why, and what success did I have and why, and you can start to kind of refine that more. But in abstract terms, it's quite difficult to do. You kind of have to do it on a relative basis against your own experiences.
That makes sense. And you've also mentioned to me once before that the key to successful investing is really finding your edge and doubling down on that, and not try to like be a donkey and just go to everything. So looking back at the past 3 years, where do you think most of your returns were driven by in terms of personal strength? And do you foresee that continuing to be your edge, or would that erode over time and become something else?
Yeah. So I think Solana was obviously the biggest winner over the last cycle.
Mhm.
And so, we asked ourselves, like, how and why did we develop that conviction? And there's some kind of confluence of factors there. But I mean, the primary one was willing to say, really ask the question, how do we scale blockchains? And then being unsatisfied with all of the answers I received from the general public, and then, have the courage to go make the contrarian bet. Um, that is very unlikely to happen again. Extremely unlikely, actually. Like a sub 1% probability that will present itself again in my lifetime, and that I will be in a position to be in the 1% position versus the 99% position. Extremely, extremely unlikely. And so, betting that those kinds of opportunities will present themselves again is actually quite stupid. The other thing to think about is where the investable opportunity set is. In general, the investable opportunity set is becoming less technical, and becoming more product and consumer facing. As you solve the core scaling problems and key management problems and data storage problems and whatever, like, right, like we want those problems to be solved, and then we no longer have to think about them anymore. And so those problems are today, for the most part, solved. Probably the largest kind of, I'd say, core technical area that is still unsolved is around bridges and around some zero knowledge stuff. But everything else today is basically there. And so we're moving up the stack into middleware and into applications. Um, and we don't know if we're going to be great investors at investing in consumer apps. We have made a handful of bets, Audius being the most notable, and we're quite happy with that one so far. But investing in something like Solana is just totally different than investing in something that looks like, I don't know, the next Snapchat or whatever. Just a completely different type of investing. And we're very open to the idea that we may not be great at this new style. And we're trying to run kind of small experiments internally and make some small bets and figure out what are we good at and what can we reason about and what can't we reason about. Yeah, it's a whole new world. You got to be open minded. You got to try and rewire your brain and hope you can navigate the world as it evolves.
Yeah, yeah, I definitely felt that when the NFTs started coming around, and I had to rewire my brain. As a final question here, I think it's really related to what you just said. If you can only focus on kind of one vertical in crypto to dedicate all your time on researching in the next, say, 1 to 3 years, is there a specific vertical that immediately comes to mind?
Um, I think the area I would say is most interesting is things that look like helium. So incentivizing people in the real world to go do stuff and create either physical value or at least electronic value. Running hashes on a Bitcoin miner is not creating value for the world, you know. Um, but really getting designing incentive systems to get people to do stuff in a permissionless and open way. That is still almost entirely uh, untapped, but at least we have a couple of proof points, helium being the most notable, that it can work. And I think that is going to really reshape large segments of the economy. It's going to reshape how people think about capital formation and value flow through big types of markets. I think that's the most interesting area to be.
Absolutely. And well, thank you so much for taking the time, Kyle. This has been such a great discussion, and we're just on the time mark. So thank you again for taking the time to share with us. And for people who want to follow you or capture your insights, what are the best channels for them to do this?
Yeah, so follow me on Twitter. My Twitter name is just my name, so at Kyle Samani, and the Multicoin blog. If you go to our homepage, multicoin.capital, I believe it's in the upper right corner. There's a email box. You can throw your email in there, and you will receive our email newsletters when we send them out.
Awesome. Well, thank you so much, Kyle. This has been great.
Awesome, Jason. Thank you for having me back on the show. It was a pleasure as always.
Definitely.